Let's move on to Bitcoin now. Goldman Sachs is going all in on the crypto craze, moving forward with plans to set up a Bitcoin trading operation, the first of any Wall Street bank. Bob Pisani is breaking down how this could rock the crypto world. Hi, Bob.
Yeah, this is important. The New York Times reporting that Goldman will use its own money to trade Bitcoin futures and a new type of Bitcoin futures called a non-deliverable forward. This is essentially an over-the-counter futures contract. Now, what's interesting here is that Goldman seems to believe that Bitcoin isn't really a medium of exchange, not a currency, but it does have characteristics of a store of value, like gold. Now, that makes a lot of sense to me, since, to me, investors seem to be doing exactly that, investing in Bitcoin as a store of value rather than a medium of exchange. Now, why the decision to get into Bitcoin? What happened to Goldman is what happened to a lot of firms. Investor interest was off the charts, and they decided to try and find a way to address that interest. Now, this is important for exactly the reasons future trading was important for Bitcoin back in December. It adds to the respectability of Bitcoin. Goldman is the first bank to have a Bitcoin trading operation. Now, this is another baby step in the institutionalization of Bitcoin. Volumes in the futures contracts, by the way, have been improving recently. Goldman tends to be a leader in the market overall in all things. They're just more opportunistic than everybody else. And there's a good chance this is not going to be the last institutional player in this space. By the way, Goldman has already been clearing Bitcoin futures for its clients. What they're not doing yet is trading Bitcoin directly. That is awaiting regulatory approval. Trading Bitcoin directly, of course, is a bit of an issue. Like, the obvious one is custodial issues. How do they secure the coins? But this is a very good first step. Back to you, Melissa.
All right, Bob, thank you. Bob Pisani from the New York Stock Exchange. For more on what this means for the crypto universe, we've got blockchain capital partner Spencer Bogart, who joins us today from San Francisco. Hi, Spencer.
Hey, thanks for having me.
Had the barrier for institutional investment in Bitcoin or Bitcoin futures, I guess, in this example, been the lack of a trading desk at the big banks? It seems that there are other issues wrapped in. And I ask you this because this is being touted as a big step. Is it really?
Absolutely. It's definitely a big step. I mean, I don't think it's a perfect solution that all of a sudden now just opens the floodgates to the institutionalization of Bitcoin. But I think, as Bob pointed out in the segment, I mean, listen, first we had the futures contracts roll out, so some robust derivative products. Now we're seeing large banks roll out trading desks. I mean, particularly when it's Goldman Sachs, I'm going to expect other banks will follow as well. And they're going to follow not just because it's Goldman Sachs, and that's what a lot of banks do, is follow what Goldman does, but because this market is so large that you can't ignore it anymore. I mean, I'm sure that most of these banks have heard about the numbers or have seen the numbers that companies like Coinbase and Binance are putting up. And there's a real risk that some of those companies could overtake some of Wall Street's biggest banks if they don't get in the market.
But in terms of institutional investment, I mean, OK, let's say this is a good first step. What's the next big problem that needs to be solved?
Sure. So, I mean, I think that Bob hinted at it in the segment, which is custody, right? So, I mean, right now we have Goldman rolling out a trading desk that will only be touching derivative products. But longer term, I can imagine that they're going to be embracing trading of the underlying product, right, the physical Bitcoin. And so, you know, I think a big piece of solving that puzzle is going to be custody.
And who's working on that problem right now?
There's so many companies in the space. Like, really, I think that this became a very well-known problem over the course of 2017, and now there's probably a dozen credible players in the space that are going after it, including companies like Coinbase and BitGo.
So in terms of your forecast for where Bitcoin could go now, Spencer, if things were to remain the same in terms of who's able to invest in Bitcoin, let's say institutions are where they are right now for 2018, where does Bitcoin go? And then if the custody problem is solved, then where do you think Bitcoin goes?
Sure. So listen, at Blockchain Capital, we're a venture firm, so we're thinking about longer-term horizons. So if you ask me what's going to happen to the price of Bitcoin over any 1, 3, or 5-year span here, what I'm thinking about is one thing. Is there going to be more buyers than sellers? And I think the answer is yes. And we can really easily think about this problem if we think there's two main groups. On one hand, we have hodlers, people who own some Bitcoin. On the other hand, we have people who don't yet own any Bitcoin. And the question is the flow going to be greater from hodlers to non-hodlers or from non-hodlers to hodlers? And my guess is that there's going to be way more people that will be newly buying Bitcoin for the first time. And they're going to be doing that through apps like Robinhood that have rolled out crypto trading, through apps like Square, and through some of the biggest platforms like Coinbase.
All right, Spencer, thanks for your analysis. We appreciate it. Good to see you. Spencer Bogart from Blockchain Capital. Hodler, by the way, hold on for dear life. The people who are just going to hold Bitcoin through thick and
Guys,
thin.
you're a hodler, right?
I was trying to figure, he said hodlers or not. I'm sitting here shaking my head. I'm looking around. What is he talking about? But it's this total thing. Because somebody put the D in front of the L and it became something.
And it makes it
Whatever
cool.
it is, those are the people who hold on to it. They don't sell it. They don't trade it.
But that's what's, I think, interesting about this. Look, I am a believer in blockchain. I'm a believer in crypto. I'm not necessarily sold that Bitcoin is the vehicle. And calling it a store of value, I just, at this point, I'm not sure you can make that call. It's not a store of value. It's a store of speculation. And that's fine, by the way. What I also don't understand, and I actually, Spencer or guys that are rolling up their sleeves every day looking at the nuances of the different tokens themselves. I mean, is Bitcoin really going to be the horse that rides to
But this is a huge tailish wind for Bitcoin with Goldman. This is, I think that once you start to get Wall Street and the name like Goldman Sachs behind Bitcoin, the average investor starts to think, okay, maybe I'll take a look at it. So I think the wider berth on Wall Street is going to be tremendously bullish for Bitcoin.
Well, as Spencer mentions, he talks about demand, and that's exactly why Goldman wanted to get in there. And I think so many other banks are going to want to follow
That's probably
along.
why Jamie Dimon backed away from his initial Bitcoin comments, because they're looking at doing the same thing.
And they're not positioning it. All they're doing is transacting for clients, which is fine. They're not,
When Jamie Dimon brought that up, was he defending himself at the time? Probably so, more so than putting this down. He's trying to defend his turf. Now I think with Goldman coming in there, I think you're going to see the rest of the banks want to get in this space. That is a monstrous growth potential, and they see that demand coming.
By the way, the move from Bitcoin from at 100, 200 crisscross, I mean, it has held 9,200 back up to 96. Technically, it's behaving as it's supposed to. Actually, I think better than the market.